Okay, so it's the August 2020 exam paper, Noel Madden. Okay, and just for our template here, there are two items inside in the paper. They're just going to show you. There's a VAT and there's a PRSI. Okay, so just to show you the PRSI. So the PRSI can come up two ways inside in the paper. So it can come up either as an expense, which means it'll be on the debit side and it'll say the employer's PRSI liability, or it can come up on our credit side, which means it's actually the PRSI that's owed to the revenue at the end of the year. Okay, so, and if we look down there, there's a PRSI here. It's the last figure on the credit side of the trial balance. Sorry, it's just a little bit slow there now. It's gone into a bit there again. There we go. So you see it down there in the bottom, it's the 4.6. Oh, go away. Okay, I just have to, it's down the very bottom. It's the 4,600. Okay, and it's on our credit side, which means it is a liability. Okay, and I have put it in here to my liabilities. So I come down inside here, inside of my liabilities, and it's PRSI, and it is €4,600. Okay, so if it's on the credit side, it can only be a sales, a liability, an income, or a purchase return. So it can't be an expense. If you're looking on your credit side, it cannot be an expense. So that means it has to be a liability, and it's the amount that's owed to the revenue at the end of the year. The figure just above it then on the credit side, just above it on the debit side is the VAT. And on the debit side, the VAT means that the revenue actually owe us a refund. And that goes in then to our assets inside there for our VAT, €3,100. Okay, I'm just going to try to open the exam papers there again. Okay, and that's why I've put it in there. Is that okay? That makes sense with the PRSI. If the PRSI was on the debit side, it would mean, and it'd say employers after it, it would mean that there was an expense for PRSI inside in it. Okay, so is there anything else in there that we see? Is there anything different that's not normally there? No, I think everything else is the same. The bank is on my credit side. So my bank is on my credit side. What does that mean? A liability. So I've gone into my bank and I've put it in here into my current liabilities for my bank there. And then there's a suspense account inside here as well, and the suspense account is on the debit side. So what I've done, just to get my account to balance when I'm starting it off, I've just put the suspense account in there to expenses, just to get the account balancing at the start. And obviously I'll take that out of there according as I go through the question. Okay, so let's start with our first one again, which is inventory again. And I said it'll always be the first one inside there. Okay, so working one is the closing inventory. So in this one now, closing inventory at the 31st of December 19 comprises of the following. Okay, and he's given us all the information to do out our closing inventory. He's given us no actual figure. So it'll be our cost versus net realizable value. So whenever you're doing inventory, it's always cost versus net realizable value. Okay, and net realizable value is your cost minus, your cost, obviously. Net realizable value is your selling price less your cost to sell, maybe cost to complete, which we don't have in this one, to give us our net realizable value. Okay, so I just put my cost on one side here. Okay, so my cost is €5, €7 and €3. Okay, then I have my selling price. Okay, and my selling costs, or less my selling cost if you want to put it in. Brings me down to my net realizable value. Okay, so selling price then is $5.50, $8 and $3.70. And then the selling costs are €1, 50 cents and 50 cents. Okay. Okay, and then it is your selling price less your selling costs to give you your net realizable value. Okay, and then we're going to value at the lower of cost versus net realizable value. Okay, so I just put my costs here. I have my selling price less my selling costs to give me my net realizable value. So which one am I going to use for my first product day there? So product day. Is it one? No, selling cost. Oh, it's the price is wrong here. It's the because of the euros. So it's 550 less 1. Yeah, sorry, it was just I had no decimal points in there. 550 less 1 giving me 450. So remember then it's your cost versus net realizable value. So which one am I going to use? My cost or my net realizable value? Your net realizable value, yeah, because your net realizable value is the lower figure. So that is how many units? We have 1,000 units by 450. And that is €4,500. Okay, so 1,000 units by 450. Okay, product B. So again, you're comparing cost versus net realizable value. So our cost is €7, net realizable value is $7.50. So which one am I going to value it at? This time, the cost figure. And the cost figure is the €7. And that is how many units that have we got? We've 800 units at €7. And that is €5,600. And then our product C. So here we have a cost of 3 and we have a net realizable value of 320. So which one am I going to use? I'm going to use the cost figure again, the €3. So that is how many units? 200 units at €3, which is €600. Which is €10,700. Okay, and that's the value of our closing inventory. Okay, that's our closing inventory there now. When I add up all those 3 items, I get 10,700. Okay, so the thing here was to value at the lower of cost versus net realizable value. It actually came up on the June paper as well. The closing inventory, he actually had a full lot on the June paper. So I can only see it being asked inside in the income statement and statement of financial position. He actually put it in here. See, he actually put it in here as a 3 marker. He had the cost to complete, selling price, and selling costs. And then he actually had the other way you can do it, where you're given the price and the... Oh, I think I actually have that on the next one to do anyway. He actually had 6 and 2 is 8 and 10. He actually had a 10 marker there on inventory in the June paper. So I think the only place he'll give it will be in the actual statement of financial position, income statement question. So our journal entry for that, we're going to debit our closing inventory. Inside in our statement of financial position, which is 10,700. And then credit our cost of sales. Or it can be your closing inventory you can put down inside there. Inside in our income statement. Either one is perfectly fine. And that is being closing inventory. Okay, being closing inventory. and to bring that figure then into my income statement and my statement of financial position. So minus 10,700 in my income statement, and that is working 1. And then 10,700 working 1 inside in my statement of financial position. Okay, and that's my closing inventory done. Next one then is the suspense account balance, and the above trial balance arose due to the following transaction being recorded in December 19. So a bad debt recovered and received of €800 was recorded as follows: debit the suspense account and credit the bank. Okay, so what should we have actually done when we actually have a bad debt recovered? Remember, a bad debt recovered is money we thought we were never going to get, but we actually did get the money in. So we actually got money in and we'd have lodged the money into our bank. So what should they have done? They should have debited the bank and credited bad debt recovered. Okay, so we'll put that in there now. Okay, so I'll just bring that in there. Okay, so we have working 2, and this will be our suspense account error. Okay, so first, what should the journal entry be? What is the journal entry for bad debts recovered? So it should be debit the bank, because remember, with a bad debt recovered, it's money we're actually receiving in. So it should be debit the bank. So anytime we want to put money into our bank, we debit the bank. And how much was it? €800. And we credit bad debt recovered with €800. Okay, that's what the journal entry should have been. Okay, but what they did, they didn't go near bad debt recovered, and they actually credited the bank. So we must correct our bank error, because they should have done a debit and they did a credit, and then put in the actual debit after that then. Okay, so we're going to correct the bank here now. So our bank per the trial balance is, okay, and if you just look at your bank now, remember our bank was a liability, wasn't it? Remember, it was on our credit side, so our bank was a liability of €16,000, which means our bank was a minus figure. Okay? So whenever you're doing a working then with a bank being being on the credit side, make sure you're putting in your bank as a minus €16,000. Okay, so we're going to correct the error. So we actually have to bring the €800 back into the account. So we're going to be lodging €800 back into our account. Okay, and then we're actually putting in the correct journal then. So we're actually putting another €800 back into our account as well. And that is bringing us to a minus 14,400. Okay, so just make sure you're putting in the minus 16,000 there. So we have a minus 14,400. Okay, and our journal entry now for all of that. Okay. So our journal entry. To correct the suspense account. So we're actually debiting the bank with €1,600. Okay, we're actually putting €1,600 back into our account. Again, if I just show you the little T account, because sometimes it's a little bit clearer with the T account. Okay, so this is our bank. And this is what they did. They came over and they credited the bank with €800 when they should have actually debited the bank with €800. So we correct our error. Of 800. Okay, and then what they should have done, they should have put €800 in there. So that's why I am debiting the bank with €1,600. Okay, I'm correcting my error, and then I'm actually lodging the €800 into my bank as well. So debit the bank with €1,600. So if I'm debiting the bank, I am crediting my bad debt recovered with €800. Credit the suspense then, because we're clearing the suspense account out of it. And if you look at your suspense account, is on the debit side. So if you've ever got to clear a suspense account, always look and see what side it's on. So if it's on the debit side, it means your journal entry has to be a credit. And if it's on your credit side, obviously your journal entry to correct it has to be on the debit. Okay, because you're clearing the whole lot. You'll never have a suspense account left inside there. So debit our bank with €1,600, credit our bad debt recovered with 800, credit our suspense account with 800. Okay, and that is being correction of bad debt recovered error. Okay, and we're going to go over then and actually correct that now. So I'm going to get rid of the suspense account. So the suspense account is gone. Okay, let's take that out of there. And where does my bad debt recovered go? It goes into my other income. Okay, my bad debt recovered. So bad debt recovered and that is €800. Okay, or some of the exam papers you'll see called an irrecoverable debt. Irrecoverable debt recovered or bad debt recovered are the same thing. Okay, and then I have to go down and change my bank. So again, with your bank figure, if you want to, you can just take the bank as the 16,000 there, as I said, and take your figures off there if you want to as well. So that's bringing our bank down to 14,400. And that was working 2, isn't it? Working 2. So the suspense account ones can be tricky, can't they, to remember for them. Okay, and my bad debt must not have added in there, so I'm just go up there and check. Yeah, my bad debt didn't add in there. So when I'm doing mine, I just put a little 0 in down the bottom here to check that I'm balancing as I go along. Okay, and that's my bad debt recovered. So remember, bad debt recovered is money we never thought we were going to get in, and then we actually got it in. So you would lodge that money straight into your bank. That's what you would do with it when you're doing it there. Unless they told you it wasn't due until the next year, which it would go in then as part of our we added back onto our receivables. But it's normally the bank one. That would be the one that'll come up. Okay, our next one then, on the 31st of December 19, a cheque received from a customer was dishonoured by the bank, and the amount of the cheque was 2,300, and this cheque had not been accounted for in the above trial balance. Okay, so it's a dishonoured cheque. So again, you're thinking, what's that going to affect? So it was from a customer, so what would that affect if it's a cheque we did that dishonoured from somebody? Our receivables, yeah, with our customers, it would affect our receivables, and then it's from the bank, so it would also affect our bank. So when you're looking at these entries here, try to think, what are the 2 items that are being affected? So it's my receivables are being affected because I would have got a check from my customer, and then it's my bank because of the dishonoured check. So a dishonoured or a bounced check. Okay, so it's going to reduce down my receivables. So my receivables per the trial balance. Okay, and my receivables per the trial balance are 21,000. And then less the bounced check or the dishonoured check. And that is less €2,300. So that is yeah, sorry, my fault. I was thinking of the bank. Sorry. Thank you, Celine. Yeah. Plus the dishonoured check. Yeah, my fault completely there. Plus the dishonoured check. No, I was really seeing where you're still paying attention. So that is 21,000 plus 2,300. Yeah, it's 23,300. And then my bank. Okay, and I changed my bank. So per working 2 now. See, my bank is changed. And my bank is now a minus 14,400. And then it'll be less the bounce check inside here. So that will be minus 2,300. So that's bringing my bank now to minus 16,700. Okay, and to give our journal entry now for that. So what do we think the journal entry would be? We're putting money back into our receivables and we are reducing our bank. So what would my journal entry be? Yeah, debit receivables and credit the bank. 2,300 and credit the bank 2,300, being correction of dishonored check. Okay, so being correction of dishonored check, and that is the 2,300 euro. Okay, and I'm going to bring that over then. So I have changed my receivables and changed my bank. So into my statement of financial position. So that is working 3 and that is 23,300. And then my bank, so I've working 2 and now I have working 3. And that is 16,700. Okay, so what I might do, before we go on to the next one, would you want to take just a short, maybe 10-minute break there, just to... Okay, so in December 19, a machine used in the warehouse was sold for 2,000 euro. The machine was purchased in May 17 for 5,000 and the sale proceeds will be received in January 2020. And Noel has not recorded any part of the disposal in the above trial balance. Okay, so he's put none of it into the trial balance. So they give us the proceeds, so the amount they actually received for it, 2,000, and they gave us how much it was purchased for, but they don't give us the accumulated depreciation, so we're going to have to work out the accumulated depreciation on it. So we're just going to look and see first what's our depreciation policy when we're selling an asset. So depreciation, okay, for plant and machinery is straight line over 10 years and delivery vehicles is 20% on a reducing balance. And there's a full year's depreciation is charged in the year of purchase and none in the year of sale. Okay, so when the year we sell it, which is 2019, we'll charge no depreciation, but we'll charge a full year's depreciation on the year we actually purchased it, which was 2017. Okay, so let's put that in there. So that is working 4, isn't it? Working 4. Disposal of machine. So when you're disposing of the machine, you just have to have your net book value, so your cost, less your accumulated depreciation, to get your net book value. And then you compare your net book value to your proceeds. Okay, so it's our cost, less our accumulated depreciation gives you your net book value. And then your net book value compared to your proceeds tells us whether we have a profit or a loss on the disposal of the asset. So we put in the piece of information we have. So we know our proceeds are €2,000. Okay, proceeds is the amount of money we got for it. Okay, so when we sold it, we received €2,000 when we sold it. Our cost then is €5,000. But we don't have our accumulated depreciation. So we're going to have to work out our accumulated depreciation. I'm just going to come over here to do that. So calculate the accumulated depreciation on asset being disposed of. And remember, our depreciation is straight line over 10 years. That will be our €5,000 divided by 10, which is €500, isn't it? Per year. Okay, so just take the cost divided by 10 because it's straight line over 10 years, which is €500 per year is our depreciation. And you must figure out then how many years you had it for. So if I just go back to the question there a minute again. So the machine was purchased in May 17 for €5,000. Okay, and it was sold in December 19 for €2,000. And our depreciation is a full year in the year of purchase and none in the year of sale. So we would charge a full year in the year we purchased it, which is 2017. We charge a full year in 2018 because we have it in 18, and then in 19 we sold it, so we'll have no depreciation for 2019. Okay, based on our rules. Full years depreciation the year of purchase and none in the year of sale. So even though they bought it in May 17, which is 5 months into the year, you charge a full year's depreciation on it. So that means we have it for 2017 and 2018. So that would be €500 by 2 years, which is €1,000. Okay, and normally when they give that question on the disposal of the asset, they don't include the accumulated depreciation. So you're going to have to work that out. Again, so just take how many years you held it for and then multiply it by the depreciation per year. So that's the 5,000 minus the 1,000 to give us a net book value of €4,000. And remember, what's net book value? Net book value is how much it's valued inside in our business. Okay, so inside in our books, we're valuing that machine at €4,000. We only received €2,000 for it. So have we made a profit or a loss on the sale of it? A loss, yeah, a loss of €2,000. Okay, so it's always, you look at your net book value, which is the value in your books, you look at the proceeds, which is the amount of money you got for it, and you work out, did you make a profit or did you make a loss on it? In this case, we've made a loss. And we must give a journal entry then for that. So in a lot of the homework stuff, people have been going wrong on this part of the journal entry. So a lot of people just give me debit the net book or credit the net book value and they ignore the accumulated depreciation. But remember, it's the full cost of the asset must come out in our journal. Our full accumulated depreciation must come out in our journal. And the amount we are supposed to receive has to go into our journal as well. So each one of these, the €5,000, the €1,000, and the loss, and the proceeds, all have to go into our journal entry. Okay, so I'm going to start with the credit side first. So we're taking the cost of the asset out. So we're going to credit the machine with the cost of the asset. and that is the full €5,000. Okay, so the full €5,000 is taken out there. Okay, that's our machine being taken out. Then we're going to debit the accumulated depreciation, because that must come out of the system as well, because that asset is now gone. So we're going to be debiting accumulated depreciation with €1,000. Then we're going to be debiting, so my proceeds figure. So I got 2,000 for it, but I actually didn't receive it until the next year. So if I don't receive it until the next year, where does that go in inside my accounts? It goes other receivables, exactly, other receivables. So if you'd received the money straight away, you'd put it into your bank, but because you're not going to receive the money until the following year, you're going to other receivables, and you're putting in €2,000 in there. Okay, and that's the proceeds figure. Okay, the proceeds figure. And then we're going to debit the loss on disposal, because the loss on a disposal is a cost to us or an expense to us, and that goes into our expenses inside in our income statement. Okay, and that is into expenses in the income statement. Okay, for our journal entry. So remember, it's the full cost of the machine must be shown in your journal entry there. And that is being disposal of machine. Okay, which means then I'm going to have to change my cost figures for my machine and my accumulated depreciation for my machine. So I just changed those figures inside here. So machine cost per the trial balance is €50,000 and less the disposal. So less €5,000, which brings me down to my new cost for machinery. Okay, so taking the cost of the machine out of the machinery that's already inside there in your trial balance. And then your accumulated depreciation for the machinery again is 10,000 less the disposal again, so minus €1,000, bringing us down to €9,000. Okay, so the disposals can be tough inside there, okay? But they follow the same thing. The only difference we would have in here, if there was a profit, we'd be crediting the profit on disposal. That's the only journal that the difference would be in the journals. Okay, and I must change all that now inside in my statement of financial position here. So I'm just going to bring in other receivables there for the machinery. And what working is that working for? And that is €2,000, isn't it? 2,000 for my proceeds. Okay, I'm going to change my figures in here as well for my assets. So that's working for again. So that's gone to 45,000, and that is now 8,000. Or 9,000, isn't it? Sorry, I brought over the wrong figure. 9,000 working for. And then I must go in and put in my loss on disposal. So loss on disposal of machine working for, and that was €2,000, wasn't it? 2,000, yeah. For my loss and disposal. So remember, when you make a loss and disposal, it goes into your expenses. If I'd made a profit, I'd have gone in here to my other income and put in the profit up there. Okay, and that brings us down then to our depreciation. Or do we have any question on that part of it, the disposal? Okay, but if you can remember, every time you're doing disposal, it's always comparing your net book value to your proceeds. If you make a loss, it goes in as an expense, and if you make a profit, it goes into our other income. And then to make sure to take the cost out of whatever assets you're selling, and to take your accumulated depreciation out as well. Okay, and then we're on to depreciation, so working 5. So depreciation, plant and machinery, straight line over 10 years, delivery vehicles, 20% on a reducing balance. So plant and machinery, straight line over 10 years. Okay, so we've got cost per working for is 45,000. Okay, and we're going to divide that by 10. So 4,500 is my depreciation expense. Okay, so 4,500 depreciation expense. Okay, then we've got our accumulated depreciation, which is 9,000, giving us 13,500, which is our accumulated depreciation at the end of the year. Okay, so 4,500 and 9,000 giving me 13,500. So straight line over 10 years, just divided by the 10. And then we have our delivery vehicles. Okay, and that is 20% reducing balance. So again, our reducing balance depreciation is based on our net book value. So cost less accumulated depreciation. Okay, and our cost is 60,000. And our accumulated depreciation is 21,600. Which brings me down to 38,400 by 20%, which is 7,680, which is my depreciation expense again. Okay, so reducing balance based on the net book value. Net book value is your cost minus your accumulated depreciation. And then we're going to add on our accumulated depreciation onto that. And that is 21,600. So 7,680 plus 21,600, and that is our accumulated depreciation. Okay, and I'm just going to change that now inside over here in my statement of financial position. So we have my delivery vehicles. What's that gone to now? That is... Oh, I never gave my journals. I'll do the journals there in a minute. Sorry, never put in the journals. So my plant and machinery, working 4 and working 5. So that's now minus 13,500. And this is working 6. So this is minus 29,280. And then up into my expenses, so I've got depreciation, plant and machinery is 4,500, and delivery van depreciation, and that is 7,680. Okay, that is my depreciation sorted there. Okay, sorry, and I must put in the journals here. As I said, I never put in the journals. Okay, so what's my journal entry for my depreciation? Which one do I debit and which one do I credit? Yeah, we debit the expense and we're going to credit the accumulated depreciation. And that is 4,500, and credit accumulated depreciation. Statement of financial position. And we're debiting the expense 4,500. And that is being depreciation of plant and machinery. Okay, and again we're debiting our depreciation expense 7,680 and crediting our accumulated depreciation, and that's depreciation of the delivery van. Okay, so always debit our expense and credit our accumulated. Okay, and that brings us down then to working 7. So during the year, Noel took goods for his own personal use valued at €900, and these were not recorded in the above trial balance. So what's that going to affect? What is it when he took goods for his own use? Drawings, yeah, and it's our extra drawings. So it's our drawings that's being affected, and what are we going to be reducing? Purchases, yeah, exactly, purchases. So we've got our drawings per the trial balance are €4,000. Okay, €4,000. plus the extra drawings of 900. So that gives us 4,900. Okay, so remember we've got extra drawings, you're adding onto your drawings and you're going to reduce then your purchases. So purchases per the trial balance are 130,000 less the extra drawings, so minus 900 euro. And that is 129,100 euro. Okay, and our journal entry for that, which one am I going to credit and which am I going to credit? Which am I going to debit and which am I going to credit? Yeah, debit drawings with the 900 and credit purchases with 900 because we're reducing down our purchases, being extra drawings. Okay, and I'm going to go in and change them now. So I have my drawings, that is minus 4,900. Working 7. And then my purchases, working 7. That is minus 129,100 for my purchases. And that brings us to number H. So for H, we have on the 31st of December 19, a credit purchase of 2,200 euro, inclusive of 10% VAT, was not recorded in the above trial balance. Okay, so it's a credit purchase, inclusive of 10% VAT, was not recorded, but the goods, however, were correctly recorded in the closing inventory. So that's actually extra purchases, isn't it? Extra purchases we're going to have. Okay. So working 8, extra purchases. And it is 2,200 inclusive of VAT. So we need a net figure, a VAT figure, and a total figure. So what's my total figure? So if it's inclusive of VAT, the 22 is my total then, isn't it? And then I'm going to divide that, 22 divided by 1.1, so 1 point whatever your VAT rate is, to get back to your net figure, which is 2,000, and then your VAT is 200 euro. Okay, so it's inclusive of VAT, that's your total figure in there. Okay, so the net figure, so the total figure, obviously the total figure, that's going to go to payables, so that's going to add to payables. The net figure is the purchases figure, so we're going to add that onto purchases. And then our VAT is our VAT figure, so we're going to add that onto our VAT liability. Okay, and I might just put them in, instead of writing them all, I'll just put them into the actual figures there now in a minute. So my journal entry first. So when I'm increasing my purchases, I always debit purchases. And that is with 2,000 euro. We'll debit VAT on purchases. with €200. And then we're going to credit payables with the full amount of money, okay? Because the full amount of money is owed to the payables, 22. And that is being extra purchases. Okay, so it's just to work out that your net figure goes to your purchases, your VAT figure goes to your VAT, and your total figure goes with your payables. And he normally gives one of them now. He might give a purchases or he might give a sale inside in the question. Okay, and I just change those figures now. So for my payables, all I'm going to do is take the 12,000 plus the 22, and that is working 8. I had a VAT, didn't I? Did I have a VAT inside in my assets? I do. So if I have VAT, okay, I'm going to have 31. Plus I'm owed another €200 back now. So that's bringing my VAT to 3,300. Okay, because when you have VAT on purchases, it means you're owed back that money from the revenue. Okay, and then my last one, and that was working 8 again, isn't it? And then my last one is the purchases. So my purchases are 129,100 plus 2,000. So that's minus 129,200, isn't it? No, 2,000, obviously, Catherine. 131,100, not 200. 2,000 is being added on there. Okay, and that is working 8 then for that. Okay, instead of writing out 3 different headings, purchases plus the extra purchases, just to add them in inside there, it is fine. Okay, and we have one left on this one then. We have, oh no, 2. Additional bad debts of €5,000 are to be written off. So what's that going to affect? So additional, yeah, my receivables and my bad debts, isn't it, are going to be affected here. So we've got extra bad debts. Okay, and what's going to be, so I'm going to have my bad debts per the trial balance are 26, and then plus the extra write-off. Okay, so we're writing off the extra amount of 2,500, and that's giving me a new figure there of 5,100. And then that's going to affect my receivables, going to reduce down the amount of my receivables. So receivables per the trial balance, and they are 23,300 less the extra write-off. So minus 25. And that is 20,800. Okay, so you're increasing your bad debt, so you're increasing your expense, and you're reducing down your receivables. So, journal entry for that. So I'm increasing my expense. So that means I'm going to debit bad debt expense. With 25, and then credit my receivables with 2,500. And that is being extra bad debt write-off. Okay, so being extra bad debt write-off. Okay, I'm just going to change them then inside in my statements here. So my receivables now, that is working 9, isn't it? And they are now gone to 20,800. And my bad debts, working 9, are now gone to 5,100. Okay, so we're bad debt write-off. And that leaves us with one left in. So number J, motor expenses due at the 31st of December 19 was €750. Okay, so motor expenses. So what's that going to be? Motor expenses due? An accrual, yeah, accrual. So motor expenses, accrual. Okay, and what does an accrual always do? Increase or decrease my expense? Increase. So the accrual will increase the expense. So we've got the motor expenses per the trial balance is 4,200. Plus the accrual, and that is 750. So my motor expenses will now be 4,950. And my journal entry for that, which one am I going to debit and which am I going to credit? Debit the and credit the accrual, exactly. So debit my motor expenses with the amount of the accrual, which is 750, and then credit accruals with €750. And that is being motor expenses accrual. Okay, and we will change that there now. So 750 motor expenses accrual, working 10, and then I'm going to go up into my motor expenses, working 10, and that is 4,950. Okay, 4,950 for my motor expenses. And I don't think there's any loan there, so there was no note for our loan, so there wasn't. But there is no non-current liability there in it, so there's no loan inside in that question itself in it. Okay, so it just takes a bit of time to go through them all, doesn't it? And different like as I keep saying, like inventory, accruals, prepayments, depreciation, usually the bad debt, or will be coming up time and time again. It's to watch then this one comes up a good bit now as well inside there, the one with the extra purchases where we have to work out the VAT and stuff, or maybe an extra sale, or a sale return inside in it. And to watch out as well for the disposal of the machine too. Okay, so I'll just